My name's Dean. Let's talk crypto. This is where you subscribe for daily Bitcoin updates and technical analysis. We track the price of Bitcoin as a proxy for the cryptocurrency markets at large. Today is November 4th, 2021, and Bitcoin is looking super sluggish. Bitcoin is looking like it's in a correction, right? And I can say that 90% of the days because, as you know, if you're subscribed to this channel, uh, when you're charting and looking at price action, the large majority of the time, you're not in impulse, you're in corrective waves, right? You're in a corrective state, whether correcting to the upside or to the downside, you're corrective, right? And so that's what we're in right now. We're in a crabby kind of looking ugly price action. But if we zoom out, and right here we're zoomed out on the 4-hourly time frame, I'm going to show you why there's nothing out of the ordinary. Bitcoin is still holding proper market structure for a move to the upside. And actually, I'm long Bitcoin right now. As I told you, I'm long for a potential all-time high, but I'm actually going to take profit before the previous all-time high because I uh, I foresee quite a lot of resistance at the previous all-time high and a probable dump right at that all-time high, even if we do move a little bit higher. So I'm going to show you why. One, Bitcoin is looking good for a rally to the upside. I'm going to now reiterate where I think Bitcoin's going, what the target is to the upside. And lastly, I'm going to restate my claim as to why I believe after we complete this move to the upside, potentially make another all-time high or get close to doing that, we're on our way back down. So if you're interested in that, if you want to know more about what Bitcoin's doing at the present in the immediate short term and medium short term and in longer time frame, then stay tuned, watch until the end. All right. As we said, we're on the 4-hourly time frame. Bitcoin is at a crucial support level right now as we speak. Okay, and apologies for getting this video out a little later than usual today. It's my son's out from school. They have kind of like grading day or something like that, so they don't have school. Anyway, so my schedule's a bit off. Bitcoin is at a crucial support. Do you see this VPVR point of control as denoted by this red line is basically a line in the sand, okay? It's a line in the sand, not completely because we can wick down, but for on the larger time frames, we have to hold this to maintain the integrity of this inverse head and shoulders. We do not want to create a lower low, as you'll see here. We've been as ugly and crabby as we've been looking. We've been creating higher highs and higher lows, right? You see that higher high, higher high, higher low, higher low, higher low. We want to maintain that structure for a move to the upside, and that's what we're looking to do, okay? From an Elliott wave perspective, we have an A, and we've formed a B wave, and we're looking for a C wave, okay? And I'll just show you that really quickly. Right here you have an ABC is basically a corrective wave that comes after a 5-wave impulse, and that 5-wave impulse, if we zoom out even a little more, on the 12-hour, we had a 5-wave impulse because the end of this B wave here, this larger B wave, is a 5-wave impulse, okay? Do you see that? So you have a larger A, and then you have a larger B, right, after our big 5-wave impulse. And this is A, this is B, and this is C. C is comprised of 5 waves. And so after 5 waves, you always get an ABC correction. And this is exactly what we're getting. So we're getting a small A and then a B, right? Sorry, small A, and A actually goes until here, not all the way down here. B, so just think of it this way. And this is simpler because it can get really confusing. An ABC correction is always going to be against the grain, okay? against the trend. So if the trend was up, the ABC correction is going to be to the bottom. It's going to go down, okay? So this is why the A wave is coming down. The B wave is actually going to go counter to that. So the B wave is going to go up. The B wave going up, right? And the B wave is not finished yet. Why? Because the B wave has to come. If it's in a zigzag, it goes to the 0.5 to the 618, or the 0.5 or the 618 of the A wave. So if we just measure really quickly the A wave, and apologies for those of you who already all know this because you're subscribed to the channel, but this is important to reiterate because you can say, well, Dean, we're clearly already in the C wave. We're not. And some people do believe that we're already in that C wave, like crypto savvy, or, some people who have a bearish penchant believe that we're already in a C wave, but we're not already in a C wave. I don't believe, because of this, what I'm going to tell you right now. If you look at this, and this is the A wave, right? The A wave down, and you take from where it started to where it ended, which is about here, and we can go into smaller time frames to really figure out why this is where the A wave ended, but I'm not going to do all of that. Basically, the B wave would have to come between the 0.5 and the 618 and stop there for it to be a legitimate kind of for it to be a zigzag correction, right? It can't break the 618, and you see here that we've significantly we've wicked up into the 618. Is that significant? I think so. I don't think that's an insignificant wick, okay? So that's why if we broke the 618 already, we can't have a zigzag correction. Then we're looking for a flat correction, which would have to bring the B wave to at least the 786, okay? That's one reason I think that we're coming up to at least the 786, because remember, in a flat correction, the B wave has to retrace to at least the 786 of the A wave. The second reason why I think that this is we're primed for a move to the upside is look at these wicks. Just looking at market structure, look at these wicks. First of all, just as I said, we're creating higher highs and higher lows on decreasing. Well, let's see. Let's not bring volume into this just quite yet, but we're creating higher highs and higher lows. And we have this inverse head and shoulders, which is a bullish pattern, okay? And when you're creating this, that is a sign of strength. And so it is an indication that price structure is looking to move up. And basically what this is a retest of this pattern that's been formed. It's a retest of a crucial it's a crucial neckline. It's not the neckline, but it's a crucial neckline of this structure, okay? You can say it's the neckline of the structure, but I think the neckline of the structure is higher up here, okay? So that's basically another reason why I think we're coming up to at least the 786 of this A wave retracement, okay? We're going to do that, and then only after doing that, we get our C. Now, just looking at what the A and the B waves look like, if you look, the A wave is itself comprised of A, B, C. The B wave is also comprised of A, B, C, right? You have to have a C wave in your B wave, okay? And the C wave is the last leg of that B wave. And that's what we're waiting for right now. So we've gotten a lot of crab. But remember that B wave is comprised of A, B, C, and it's hard to see these things because they're messy and they look they look like different structures. More, they're not always looking the same, okay? But you want to keep all of this in mind. A lot of times you just want to keep looking at them as much as possible, and it'll make more sense to you, especially on the smaller time frames when you can see more definition. You can really make out, right, that this is an A. It looks like an A because you see these all the time if you're looking at price structure. And again, B wave is going to be in the other direction, right? So the A, the the A of the B wave is going to be counter to where the B wave is going. The no, that's incorrect. The A of the B wave is going to be to the upside, right? Because the B wave's to the upside. If the A wave's to the downside, the B wave's to the upside. The B of the B wave is going to be counter, and I think that's what we've been in, and that's what we're still in. This is the B wave. All of this is the B wave of the B wave, and then we're expecting a C wave of that B wave. So if that makes sense, this is what we're looking at here. And, this is why these corrections are so challenging, because they're so messy. They're not clean. They're in no way are they clean. So this is the A doing this, okay? And then you have your B doing no. I'm confusing myself. It's so confusing. How do we do this? Remove. I just want to illustrate this really quickly. And I have to do this myself because it is very challenging. This is the first leg that's A of B, okay? And all this chop is B of B. That's what I'm seeing. All this chop is B of B. And you're about to get, literally, at this moment, C of B, which is going to take you up here. This is going to be the target of this inverse head and shoulders. I hope you can all see that. And then you get your C wave, which is going to take you to the downside. I hope everybody sees that. Okay? And so basically, when I'm trading, I'm obviously using knowledge of what I just showed, but I'm not making, because it's so messy and it's not high probability. It's easy to have to get things wrong when you're trying to track these corrections. I'm not necessarily trading them per se. I am trading them. I'm trying to make entries at specific points, but I'm using a combination of Elliott wave analysis. I'm using a combination of pattern analysis, and I'm really trying to make a good entry, just like I try to make a good entry for a long here. I made an entry. I made a decent entry, and I'm not going to go into exactly how I made the entry, but I made a decent entry for this long, right? And it's basically using a combination of Elliott wave theory and this pattern analysis. And so, like I said, the target for my long is right shy of the top of this A wave, or the top of this wave 5. Why? Because I foresee we're going to get quite a lot of resistance, maybe people looking to take profit. And along those lines, I also want to mention that, these wicks right here, the wick that we had yesterday, that, $2,500 or something heinous like that, that stopped a lot of people out, liquidated a lot of people. And the same one that we had here on October 28th are part of, it's not just stop hunts, like there are evil people that have a lot of money and that they want to just stop these retail traders out. No. You see these things, think about it, when people want to dump, they have a lot of Bitcoin or whatever asset you're tracking, and they want to dump, and they foresee a reason to dump. Okay, so these are people that think that we're nearing a top as well, and they just want to offload their bags. So they're looking to do that, and that's how you get those wicks. Okay, and when you get that, you have to think, why would people with that much money that is required to be able to move Bitcoin's market by that much in that little time, why would they want to do that? People need to be asking themselves that question instead of saying, oh, it's just that people hate me, they don't want retail traders to make money, and they want to stop them out. Really think about it, right? When you see those big wicks, that means people are offloading bags. People with a lot of money, probably a lot of resources, that are able to do pretty good analysis, okay? So this is another reason why, and a lot of people are going to be looking to do the same thing when we get up to the previous all-time high. I guarantee you, even though the target of this inverse head and shoulders, which we're going to take now, is, let's see. So looking at the VPVR, this seems to be a good neckline right here, right? like right, let me turn the magnet off. This seems to be a good neckline for this structure here, right? And so if we take the head from the head, let's turn the magnet back on. From the bottom of the head, I'm going to use that wick. I do not disregard wicks. I don't think that it's a good practice. I take everything into account. Either take wicks into account or don't take them into account at all. I think that's the best way. Just be consistent. So right here, I'm going to take, that is my distance. So my ultimate target would be shy of 70,000. I think that we're going to eventually hit 70K, but I'm going to look to take profit right before we get to all-time high, because whatever that is, if we start doing an impulse, right, and I'm going to track the Elliott waves, it's going to, one of the waves is going to end right before this. Maybe it's the 3 wave, most likely, right? I don't know if we're going to get extended waves. It's hard to say, right? But even if we do, I think something is going to stop right before this all-time high. We're going to get a correction. I can always get back in if I foresee that there's going to be further upside. So that's basically my play. But just trading off of this pattern alone, it looks like we are going to come shy of 70,000, and that's another psychological resistance. It's a nice round number. People are going to look to take profit right before we hit that. So that's what I'm seeing for Bitcoin. And again, that would be consistent with the larger time frame analysis. And let's zoom out. And this is the last thing I'll say. And for those of you who are subscribed to the channel, you already know this. I believe very, very strongly that we're in a B wave and that we're nearing the top of the B wave, which is why on the high time frame, the daily, you see the strong bearish divergence, right? On the weekly, you see equally strong bearish divergence. You see a topping out of the RSI, as you can see here, right? I think we're in for a large drop to the downside to complete this C wave, okay? I don't like people who think that we're going to come back down and touch this 21 EMA and then keep going. They know nothing about Elliott wave theory. Or little about price action, to be honest, because just look at like a basic indicator, like the stochastic indicator. It doesn't just keep going. This is clearly an ABC correction. This is clearly not an impulsive correction. If this were an impulsive correction, then why would we stop here? We would keep going. There's no reason to retrace, right? This would be a 3 wave. This would be 1, 2, 3. 3 would be the largest and the most impulsive, most likely, and it would take us well into the 100K region without stopping. There would be no reason to stop. So that's pretty much my sort of high time frame analysis. So be very careful when you're trading. I'm trading this very carefully, very conservatively. Again, that's why I'm taking profit right before we get to the previous all-time high, because the dumps that you're going to see and the rejections that you're going to see are going to be quick, swift, and heinous. Mark my words. All right. So that's it for today. Hope that was helpful. Hope that was useful. If you like that, please like, subscribe, share the video, and stay tuned. I'll see you guys tomorrow. Bye.